Welcome to this video where we talk about 3 stocks to buy now and never work again. Okay, so I'm pretty sure that you maybe heard some of the stocks, maybe not, but I will give you very unique explanations why the stocks will be good in 2025. Okay, a lot of things are changing, the market is changing, Trump is the new president, so a lot of things are different in this year, and this is very, very important. Okay, if you don't know me, my name is Danny and I'm looking for very big stock opportunities. I invested into Tesla when it was an $18 company. Now it's a $500 company. So let's dive directly in. First stock is actually a stock which will do great because of their earnings growth. Okay, so I try to assist with this presentation here on the spot. So actually, if you have a company, okay, you have a company, and this company are having actually 2 graphs, right? So the number 1 graph is the stock price. Okay, let's say the stock price is going down. Why? Because let's say multiple things. Let's say because the market is very volatile. Okay. However, the earnings though of this company, well, that's now not so great. But let's say the earnings are going up. Okay. Maybe I should have put that a little bit lower. Let's say that. And obviously it doesn't go to 0, but it goes like that, something like that. Okay. And the earnings are going like that. Okay, maybe even a more aggressive curve here, but you get the point. Okay, it looks a little bit like a fish now. So earnings go up, revenue goes up, but stock price goes down, and this can be a lot of things. Okay, macroeconomics, earnings, sector not good, maybe because of a huge run. Actually, now it's a kind of cooling down, and exactly this area, okay, this area is your chance. Okay, this area is your chance. This is actually one of the most important areas. Okay, let's make it green. This is because this is huge. Okay, why is this so important? Because markets will always be volatile, and markets will always go crazier up than they actually should. Okay, like in a perfect world, right, you have maybe something like that. Okay, so let's delete that. So you have something like that. Okay, revenue going up, okay, and stock price is going up as well. This is like a perfect world. But this doesn't exist, okay? Because you have different kind of reasons why the stock goes down, okay? So let's say the stock goes down because, as I said, some macroeconomic news, and let's see if I can, let's say here, okay, we having a negative event. Here the sector is not doing well. Here the inflation is going up. Here, bad news about the company. Okay. However, those are always chances to have this difference, right? Because if you have then the stock price, most probably it will be then something like that, right? So something like that, something like that, something like that, and something like that. Okay. here, actually, let's say we turn around, okay? Because here, and this is the point, at some point, as you can see, this area, it's getting so ridiculous, okay? It's getting so ridiculous because the stock is getting very cheap compared to the growth of the earnings, okay? So here you can see, okay, you know, we were overexcited due to the gain. You know, then there was some negative news. Okay, we're going down a little bit. Then we're going back up. Again, negative news. Market is not so great, right? We're trying to bounce. Another negative news. We're going back down. And here, when another great negative news comes, and you are still a huge difference to the earnings, then at some point you have like an aggressive move up. This was actually the point when I invested into Tesla. And I will show you how that looks in the real world, okay? So NVDA PE ratio, okay? So NVIDIA PE ratio, or in general, the PE ratio always shows you the price of the stock and the earnings, okay? And you can see here that the earnings, the PE ratio for the stock is going up and down, okay? So here you can see this is the stock price. It's going up tremendously. Here it's going big times up. Here doubles, you know. You see here from 13 to 30 almost, right? While in a very short time, this is like 2022 till 4 months later, sorry, not 4 months later, around 6 months later, we double. Obviously, the earnings of a company doesn't make this move. And that's why you see this huge difference in the PE ratio. Currently, we are like at 50s. I think that somewhere at 30s, that would be ideal, but you never can buy perfectly the stock of NVIDIA, okay? I think that the PE ratio of NVIDIA will go back up into like 144s, 150s. And then, you know, that means that it will be triple the price, okay, from here. Once they just show us that the earnings are actually doing well. And then you have here, for example, you see revenues going up. And this is especially when we're going back to our point, we are somewhere here, I would say, okay? We are somewhere here with NVIDIA. Let us have a look. What can we make a dot, okay? So we are somewhere here. I would say we are somewhere here, okay? The PE ratio is not too crazy. We are, and let me show you something. Maybe that's also great. So PE ratio, PE, let's say 30, okay. Let's make this a little bit bigger. So also, here we have PE ratio 30. Currently we have PE 50. Here, as the stock price is very much close to the earnings, as let's say 80, right? And then you have obviously sometimes situations where the price, because of some crazy situation, goes to 150, okay? So you can see here when sometimes the stock price is going faster up than the earnings, and that's why you have like a huge valuation, and I think like this is the perfect time when you can sell a little bit. This is usually a time when something is up there, and if we're going back, you remember what was here? Do you remember what was this? This was the ChatGPT moment. Okay, ChatGPT came out, millions of people downloaded it, and obviously everybody was thinking like, what stock can I buy to benefit from ChatGPT? And obviously it was NVIDIA. Okay, so this is stock number one. I think doesn't matter how the stock market will perform, and as better the situation goes, we should have at some point another squeeze and coming back to this kind of PE. Just if we go back to PE 80 or to somewhere PE 100, then, you know, NVIDIA should be double the price. Okay, so we are on the cheaper side. So I would buying here, buying here, buying here, and buying a lot here, right? Because then we go back up and then, you know, we double easy our money. So that's number one. Okay, so NVIDIA is number one because of that. Now let's talk about something different. Okay, now let's talk about technology. Okay, and changes in industry. Okay, so I would say like 10 years ago, 2000 and let's say Mercedes. Okay, do you remember this kind of Mercedes? Yeah. Oh, this is beautiful. This was actually the peak of car in 2015. Okay, beautiful car, beautiful technology, everything was nice. But then something changed, and I will not talk about Tesla stock here, guys. Okay, then something changed. From this, we go to this. Okay, or even what is the newest one? I think this one is the newest one. Okay, so we go to this. Okay, and this happens. This don't come overnight. This comes in many years. Okay, actually, if we are looking into Tesla, let's have a look when this actually happened. So Tesla was here at 10 years ago. Look where Tesla was, at 13. I started to buy somewhere here at 2019, and then you had a huge run. Okay, I believe that we are in a new version of that, but in the broker field. Okay, the broker field means like the finance world. Okay, we go, let's say stockbroker software 2025. Okay, that looked more like that. Okay, we go from that, and the new technology essentially is that. Okay, okay, Robinhood. Yeah, because on Robinhood, you now, let me have a look. What is a good picture here? Robinhood actually does something very good. Okay, they are. Let's take this picture anyway. You get the. They are actually doing something that is everything in once. Okay, so for once you have a bank. Okay, then you have a crypto wallet and a place where you can buy crypto, a place where you can buy stocks and hold, and let's say, how you say it, just, you know, invest. And then you have also an area where you can trade. And then you can have also a bank card. I think this bank card is like beautiful. Okay, beautiful. Okay, the golden one. All right. So you can see it's not only, let's say, a broker, it's also a bank. And I think that Robinhood does this very well. And I think even though Robinhood went over since 2020, I think they had their IPO everyone was crazy. Then the bear market came. Then they went to 7. And now they're at the PE ratio of 85. And, just since the 2024, they went 5x. Okay, sorry. They went 5x. Okay. This is beautiful. And I think this is just the beginning. Okay. I think that this kind of stock is predestinated with all the volatility that's going in the market in 2025. With so much going on, like the Trump coin, like crypto, there will be so much going on that everybody will go to Robinhood and trade there. All right. And they are expanding into new countries. They are really, really good in what they are doing right now. It's super easy. And I think that this kind of PE can be easily beat. Let's have a look what was the Robinhood PE over, I think it was skyrocket high. This would be my prediction. Okay, let's have Robinhood PE ratio. Okay, so let's have a look. If we find some historical data. What was the other macro? I think macro trends. Here we go. Why go for a premium when you have something for free, right? So in the 2 years, we had, I told you, 150 was the PE ratio. And then we dropped to even 40 for a technology company that is the hottest thing, and they went positive on their EPS since 3 quarters now. This is also very important, guys. The stock can rise very much when it's going up in terms of EPS or the profit that they are making per stock. Okay, so you can see it was a huge surprise. They doubled their EPS, and I think that will be happen in the next couple of months as well, even more. And the PE ratio doubled from September, and I think we are going back to 150 levels. Okay, so that's just, and if the stock market is going down in 2025 because of because of volatility, then make sure to just buy more as lower we go into PE ratio. I think like PE ratio between like 30 and 50, similar to NVDA, for this company with this growth going worldwide is just absolutely phenomenal. Okay, so that was Robinhood. By the way, which kind of valuation they have? Robinhood. So Robinhood has a valuation of 43 billion. Okay, so not that bad. Quite easy. Quite small company actually. Okay. Okay, coming to the last stock. And let me just double check which one it was. I think it's Intel. Okay. Sometimes, going back to our chart, sometimes we have something like that. Okay. Sometimes you have something like that. Okay. You have the earnings and revenue of a company. By earnings, I always mean like, it's going like flat because they are not innovating, and then at some point it does something like that. Okay, something like that. All right, so the stock price stays, something like that, up and downs depending on the situation. But then it sees, oh, shit, what's going on, right? And you actually deep dive with everything, okay? You deep dive with the stock price. You deep dive with, you deep dive with the stock price. You deep dive with the stock. Everything looks very, 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 very bad, okay? Symbolizing very, very bad. And there's like two options, okay? There's two options what's happening after this scenario, okay? We are here, very bad, okay? There's two things that happen. First, there could be news, all right? Second, there could be change, all right? And then turnaround. I will explain all three. First of all, once the stock is going down so bad, and just to give you an example here, over the last 5 years, Intel from the highest point of 70, okay, went to 20, or I think even 18, okay? So you can see here now, we are somewhere here, okay? We are somewhere here. You see? Perfectly aligned, okay? We are somewhere here. So what can happen? First, there could be news, okay? There could be news that something is up, okay? They will change something, okay? So news and change is kind of, you know, getting in each other, okay? It's like one thing, okay? So news could be, for example, they will change the CEO. They could go away from different kind of, let's say, you know, kind of products that they didn't really benefiting from. Or they can totally, you know, turn around, and this can be because of that, you know, it could be a purchase of, maybe someone says like, Intel at 2186 is beautiful, cheap, I will buy everything. And Intel is actually, Intel book value, I think that was somewhere in the news recently. Intel have bottomed at the tangible book value, okay? There's merger and acquisition buzz for a takeover for Intel. So there it was even news, okay, that Elon Musk is buying Intel, which was like, wow, okay, even with Elon Musk. Why? Because Intel is in one important industry, okay, and it's chips. Chips is the most important, or silicon or semiconductors is one of the best industries out there. That's why NVDA going so high. So the question is, can you turn around a company that is not doing so well in 2025? And it's trading below book value. Okay, here I will tell you what is book value. Book value is essentially, they have like machines and they have like different kind of situations, and here you can see we are below that. Okay, so let's say you have a machine that is $1 million, and this machine for $1 million is actually, you know, if you can sell it, it's worth, let's say, $800,000. However, all your stocks together, all your company worth, your market cap is $500,000. That means you could actually buy the company, sell the machines, and make even a profit. So it's super cheap compared to what they have in machinery. And that's actually the case. We just dived into that in 2024, okay? Below book value, okay? And that's why it's so interesting. They are still in the big chip sector. They can make some changes. There's rumors. So I believe at 21 here, it's very cheap and we can see a 40 Intel, or, you know, even here you see 2 years ago, or not 1 year ago, approximately 1 year and some, Intel was at 50. And I think that can happen very, very fast. Actually, the last months alone, we gained 11. The lowest we went was at 18, okay? It's an American company. It has so much history. It's an obviously target for merger and acquisitions. So that's my third top tip. And I think with these three stocks, okay, NVIDIA, Robinhood, and Intel, you would be good even in a very, very volatile stock market in 2025. If you like this video, make sure to like and subscribe. If you want to check the link in the description where I trade on every single day basis, and I invested $1 million above that in my own trading software where I send the trades directly into your own portfolio at Interactive Brokers. Schedule the call and see if we can help you as well. And other than that, it's my top 3 picks, and you know, let's visit in a couple of weeks and see how we did. I hope you like that. I hope you like the style. Let me know in the comments, and we could see something like that for, you know, Intel. Let me just give me one more second. Something like that. A huge turnaround going back to 50s, for example. Okay, so looking forward, and let me know if you liked it.